market update. Bears versus Bulls for the week of November 21st, 2021. And I hope you guys are doing well on this Sunday. And it's a great day because UCLA beat USC. So I'm wearing my shirt. Big score. 60-something points to... so anyway, the Trojans were beat and the Bruins are on top. So we're going to do my weekly market forecast. No, I've been away for a bit. We're going to get started right now. You can hear my voice and see my screen. And I'm getting back in the saddle with this, so not sure if you are out there. If you're not, then you'll just watch the recording, which is not as good as live, but is just as good, right? Okay, let's go ahead and get going. All right, so let's go into the risk disclosure on the screen. Make sure you understand all the risks associated with foreign exchange trading. And don't know if I'm frozen. Frozen chosen. Okay, so here is a risk disclosure on our screen. Make sure you understand all the risks associated with foreign exchange trading. And let's go ahead and get right to it. We're going to look at the calendar, the Forex calendar, and we'll bring that up right now. Okay, all right. So let's go here. Okay, so we're going to use my market heat map. My market heat map is an arrangement of currency pairs by percentage change, and it's a very powerful market scanner. And so let's go ahead and open that up, and we're going to go right to. I'm going to close some tabs up, I guess. Okay. And let's see if we can close this up right here. And let's go right to once you log in, we'll get into the economic calendar. And so there's a number of tools here. The heat map is a powerful market scanner, which I use to find out what's hopping, what's popping, what's dropping, what's not in the market. Right now, the markets are closed. They'll be opened up in the next, say, about 3 hours. We'll have New Zealand market open up. So right now, all the tiles here are gray. So we'll go right to our. But when the market comes alive, those they will start flashing and being pretty active. Okay, so let's go right to. We have a lot of tools here. We have charting, quotes, economic calendar, financial news stream, technical analysis screener, and a number of other tools. So be looking for videos to explain each one of these. It's a powerful, multifaceted tool. And when I get started in trading the Forex market, what I like to do is I like checking out the economic calendar first. In fact, I have a checklist that you can email me for. And what we do with this checklist is go through a process of actually choosing what's moving, what's happening in the market, and picking the right currency pair is one of the primary things that traders, successful traders do, is by finding those things or those currencies, those instruments that are going to receive the most liquidity, the most volatility, the most volume. It's a party, right? And you want to be where the party is, where there's dancing and music and food. And if it's dead, you don't want to be there. And some of these currencies can get kind of dead because everyone is at another party. So if you've ever been to a currency and it hasn't moved and it's not moving and you don't know why, but then you look at something else. Maybe you look at another chart and you say, oh, wow, this is really breaking out. Well, there's probably there's probably a catalyst. There's something that's driving the market. There's a story that causes the currency to move. And what we do is we're looking at those stories at what people are actually looking at. Now, the big story that's going to come up about 6 hours from now is the Chinese interest rate decision that's going to come out Sunday, November 21st, 2021, as you can see here. And he said, well, Greg, we don't trade any Chinese currency, so why should we even care? And we should care because one of the largest trading partners with China is Australia and New Zealand. And we do trade the New Zealand dollar and Australian dollar. And so if the Chinese economy catches a cold, then Australia and New Zealand usually get pneumonia, okay, to use that as an analogy. So we want to actually pay attention to this. And that comes out about 8:30 Eastern time. And so that'll be out. So what you want to, so the Australian dollar and New Zealand dollar will be in play, and you can use those as proxies or stand-ins for trading the, because, unless you want to trade the Chinese renminbi, not a lot of volume in that. The Australian dollar will probably have more volume. And so we're going to be looking at that. That's going to be in play. We're going to put that on your watch list. On Monday, November 22nd, we're going to be looking at the Australian dollar for the Commonwealth Bank Manufacturing PMI. That's a medium. I don't really look at the medium ones, but we have a shortened week. It's Thanksgiving week, guys. Thursday in the U.S. is the Thanksgiving holiday, and I'm thankful for all you guys for actually watching this, and I'm very thankful for all my students in the Elite Traders University as well. So I wish you a happy Thanksgiving. And it being a shortened week, it's going to affect the amount of news that's out and also volatility too. So, but we do have, so I've included some medium-term items here that may come up, but that's the only one, because if you take it off, it won't be anything happening for Monday. But there is something going on medium term, may not have as much impact. The more impact, or the higher priority that item is, if the impact is high, usually there's a bigger move in the currency. So usually I have only the high ones listed. This time I put the high and the medium ones because we have a shortened week. Okay. Now, we've also gone back to the old economic calendar by popular demand, thanks to Jeff. Hi, Jeff. A number of emails who did not like the other economic calendar we had previously. So we brought back the old one. So I hope you guys like it as well. And I actually do too. I like the flags. I like the way it appears as well. Okay, I'm trying to get into my own group here, the Forex Cash Machine group, which you guys should join. There I am, and I see that it's a little bit laggy, a little bit behind, but okay. Moving right along, Tuesday, November 23rd, we're going to have some GDP out of Germany, year on year, 2.5% is the previous number. We'll see if the post-pandemic, actually we're still in the pandemic, but we'll see if as we move through the pandemic, will Germany's gross domestic product be higher, right? If it's higher, Germany is one of the largest economies in the Eurozone, so we would look at the Euro as a possible trade setup. So the Euro will be in focus. That's going to be at 2 a.m. Eastern time, so a little early for those of you who are living here in the U.S. If you are in, maybe Hawaii, probably my favorite places, or if you're in Europe, then you will probably be able to trade this. Okay, so we're looking at the GDP year on year and quarter on quarter. We're also going to have some manufacturing PMIs, or Purchase Managing Index, and this is a survey that goes out to the purchasing managers, kind of gives us a gauge of economic activity. And you're going to have the PMIs out of Europe, out of Germany specifically, and out of the UK. And we're not giving a forecast, but the numbers, so higher than 57.8 would be good for the euro. Below 57.8 would be kind of bad for the euro. Okay, and the thing about it is that these things are happening this coming week. Big players are taking positions, or have taken positions, or building positions going into these announcements. And so In the Elite Traders University, we have a way of forecasting and looking at that institutional order flow and being able to predict several bars ahead what's going to happen next, so we can actually game this in a way, if you might say. So if you want to learn more, go to elitetradersuniversity.com, and there's a masterclass there that you can access for free, as well as you can sign up for a free discovery conversation with myself. Okay, moving right along, we have a Bank of England speech as well. So again, the pound will be in play. So the speeches from Australia, the RBA, the Reserve Bank of Australia, that is the Australian Central Bank, and so that's what we were looking at as well. And okay, yeah, let's hold it going. and so we have also moving. That's going to be at 2 a.m. Between 2 a.m. and 3:30 a.m. We're going to have this news coming out on Tuesday, and then the RBA bullet speech is going to come out for that is 17:15, 12. That's like 5:15, right? Now, remember, trading currencies around 5 p.m. Eastern time could be kind of risky because you have spreads widening, low liquidity. So I would not trade until maybe 6 or 7 o'clock p.m. Eastern time. Now, what's really big for Tuesday is the RBNZ, or RBNZ, as other people say. It is the Reserve Bank of New Zealand, and that's the interest rate decision that's coming out. And interest rates are the prime movers of currencies. So we want to be able to see what they're going to say. Either they're going to raise rates or lower rates based on the economic activity. The previous number is 0.5%, and the interest rates that are around the world have been historically low due to COVID having an impact on economic growth. So keeping interest rates low and providing extra stimulus is a way for the central banks to help jumpstart the economies. However, we've been seeing a spat of inflation, and that usually happens as we have all this money coming around trying to buy cheap or trying to buy goods and pushing the price up. We've had supply chain disruptions because of COVID and some other things, where goods and services coming from Asia haven't been reaching the U.S. and they're backlogged due to the supply chain disruption, and the lack of supplies has driven prices higher. And so central banks, in order to fight, the two mandates of a central bank is price stability and job creation. Okay, price stability means they don't want prices like going up in high, too high in inflation. So what they do is they raise rates or really decrease the supply of currency to actually control the flow of currency, and then that would depress prices, right? Because if there's less money out there, then there will be less available to drive up these prices, and that's the whole mechanism that they try to control prices. However, many argue that raising interest rates, when there's really just no supplies, that would be counter. The risk of deflation and creating an economic crash is worse than allowing some inflation. And the CPI, or Consumer Price Index, that we had recently saw 30-year highs in the in inflation in the U.S., something that we haven't seen in like 30 years, right? So this inflation, now we're talking about the rate decision here in New Zealand, but there's global inflation being seen everywhere. Higher prices at the pump, higher prices in real estate, higher prices for raw materials, and a lot of it stems from the supply disruptions from COVID. So we'll see if they raise rates. If they raise rates, it could cause their currency to rise, and we can see the New Zealand dollar actually pop on this. If they decide to cut rates or keep rates unchanged, then we might see a back down in the New Zealand dollar. But we can actually see what's going on in the charts, and I'm going to bring some charts up in a couple of minutes. Wednesday, we're going to have a lot of U.S. data. It's going to be a big U.S. data day because the day after that is Thanksgiving, and then you're going to have continuing job claims, durable goods, gross domestic product, and core consumer consumption expenditures. And so basically what we're going to be looking at is the euro and maybe the dollar Swiss. Those are the two currencies because the euro is the anti-dollar, and strong U.S. data would probably drive the euro maybe down. It's been in a downtrend, so we might see the downtrend of the euro continue. The dollar is actually going up. Now, this is counterintuitive. It used to be the other way around, where we had good U.S. data and the euro would actually falter. Actually, we have the euro rising on good U.S. data and the dollar falling. Now we've seen the dollar in an uptrend now and higher inflation, and the potential that the U.S. Fed could raise interest rates. So we're seeing this kind of bias toward a stronger dollar, higher dollar, and also a weaker euro, since the European Central Bank, their interest rates are probably negative. And we can actually go to a part here and actually show you what the interest rates are. Thursday we have Japanese data, and I really don't look at Japanese data so much. Japan has enacted a huge stimulus program, and so the yen may benefit from it, especially if the dollar is going up. Usually the dollar and the yen go in the same direction, and we've been seeing the yen starting to trend up as well. That would mean the Aussie yen and dollar yen, or Aussie yen, euro yen, and those currencies would actually be going down, right? Again, and the yen strengthening. And then we have some Swiss data coming out on Friday. I guess they don't have Thanksgiving, of course, because Thanksgiving is a U.S. holiday. Okay. So that's what's on the calendar today, but basically in play, we're going to be looking at the Aussie, the Kiwi, and the euro, the pound, and maybe the Japanese currencies. Could be it could be very interesting in the short, but let's not speculate. Let's go ahead and take a look, okay? So I'm going to bring up the technicals now. We're going to go right into the technicals. And let me actually show you where those interest rates, central bank rates here, we can click here. We actually see what the central bank interest rates are. And you see that the Eurozone, 0, okay? So money goes after interest rates, and so and there's probably no, I think Christine Lagarde, the president of the ECB, said that there's probably not going to be a rate raise until 2022, which is not too far away. It's around the corner, but we're more likely in the U.S. to have a rate increase than Europe. And remember, money follows interest rates, right? And this is what I'm going to show you. Well, this is the U.S. dollar index, which is a basket of currencies versus the U.S. dollar. And we can see that we have we had a downtrend for a while from May all the way down to about January of this year. And what we've had is a rally, a very sharp rally in the U.S. dollar. We found maybe a double bottom in this area, in the 89.56 area. And then we saw prices just rally and a new rising uptrend, a demand line in the U.S. dollar. Okay. Now remember, the major currency pairs that have dollar in the back, like EUR USD, GBP USD, NZD USD, AUD USD, those currencies are going to be trending down when the dollar is trending up. That's very important to make note of, that you can't have the Australian dollar go up and the dollar go up, the US dollar go up at the same time. So once you understand this comparative analysis, or this this negative correlation was what they call it, fancy word. That's what my my father-in-law would call your 50-cent words. You have 50-cent words, and you've got like dollar words, and you got 10-cent words, right? So let's try. Okay, so there's your green. You've got your supply line, and you have your demand line. You can see we've found that support. We broke a previous high. 93.45 was containing price, and now we're breaking out to the north side, and we have this, and then we have an accelerated trend line where prices just become what we call parabolic, where prices just start going vertical, right? That just tells you the higher the angle, the steeper that angle is, the stronger that trading instrument is. You see something like a Tesla, you see something like Rivian or Lucid, some of these EV stocks, or some of the cryptocurrencies, they can get vertical, and it makes it kind of difficult to trade against them, right? I mean, you could try picking a top here, try shorting here, it breaks out here, it breaks out here, and we have virtually a short squeeze rally where prices keep scaling this wall, right? So we have this established uptrend in the U.S. dollar. So what we would look for is U.S. dollar currencies that have dollar in the front, like dollar CAD, dollar Swiss, dollar yen, to be moving to the upside, right? Until this line is broken. Once this line is broken, then we could probably start, maybe start buying the euro. The euro is the anti-dollar, so if the dollar is going up, then we look at the, and we can actually put in some. I mean, we've got this basically a bounce from a downtrend, and when we have bounces from downtrend, we just simply take a Fibonacci from the high to the low. The old Drake song, from the bottom to the top, and now I'm here. We play it backwards, from the top to the bottom, and now we're here. And we're right at the 50% retracement, so there could be some retracement here or some break of this line. Very steep trend line. Steep trend lines tend to break hard the other way. But if we break 96.31, we could see a roll into 98.00, and that would take all of our risk assets down. Our pound, our New Zealand dollar, Australian dollar will collapse. However, if we see a break of this 50% retracement, 96.22, we could see upwards of 97.85. Now, the dollar is very important because, hey, you trade your dollars to buy Bitcoin. You trade your dollars to buy Ethereum. You trade your dollars to buy these alt currencies, right? You are trading your dollars. If the dollar is going up, it's going to be very difficult for crypto to even go up against a upturn like this. Hence, we saw. I'm just going to take a quick jaunt at Bitcoin, BTC USD. And we can see that we've had, this very big breakout, right? We had this upward trend line in Bitcoin, and we can see that we hit a high of about 68.90, almost 69,000. Broke the trend line, and we're dropping in corrective fashion. We got down to a low about 55,607. And we've rebounded from there since then, right? Now, very important, and we have another trend line, another demand trend line here as well, bouncing off this low. We break that trend line at 57,500. We could look for a bigger correction, even down into the 40,000 area. I know people are saying, Craig, if you're long at 70,000 or 69,000, you're really hating life right now. However, we do have a downward sloping trend line here. We can break that, and that would be around 60,268. those numbers are just incredible, right? Incredible numbers. We can see a move into the 6,500 area, right? We can take a fib from here to here. Oh, gotta let go, and then we can see retrace. There's resistance, 38% retracement, 6602, and then the 618 at 63,773. I can barely see this one. This is 50% retracement, 62,119. So we're getting a bounce. Maybe this is just an ABC correction, and then we can see maybe we can break that trend line. We can see the old highs come into play. If we see the old highs come into play, that could be a double top, and we could see maybe a further correction down. If we can clear 68,905, then it looks very good for the bulls. We could easily see 75,000 by the end of the year, right? So, but the key is the U.S. dollar. Remember, it's Bitcoin versus the U.S. dollar, okay? So if you want to get a clue of what's going on ahead of time, check out your dollar, right? Dollar is going up means that Bitcoin may, we're double topping here, and so a break of this trend line would give us the green light to get long Bitcoin. Not just Bitcoin, but I'll show you another one, the anti-dollar, which is the euro. And the euro has been just in a free fall. And seasonally, or if you go back in time, we had a support zone that held for a really long time. And I was looking for that support zone to actually hold as well, because price has a memory, but past performance is not an indication of future results. And we can see price, every time it came down to this level, it shot up, right? Now here, it came down a little bit, rallied, starting to get a bounce, and then it broke. And if you go all the way back, we've had this low where we bounced off it back in 2017, and we were supported 2018. It was like, hey, but you've got this kind of like really monster double top looking pattern here. We just broke, and we're at 112.80, right? And we have support on this daily chart down here at 1.1162. And so we probably have some more to go to the downside, and we can have now we can draw a trend line. We have a steep trend line, not very steep, but still it's lower swing lows and lower swing highs is our downtrend. And if we broke above 1370, we could probably see a move back to 115. However, the trend is your friend right now because the dollar is strong. That's the key. Remember, if the dollar is up, the euro is the anti-dollar. So if the dollar is going up, the euro is going down. Okay, real simple stuff. So shorting this back down to the 116.12 area would be, or 111.62. Okay, 111.62. So we're looking at that. That would be a continuation. We have a bearish engulfing basically of that. The candle engulfs this one, and we can see a move down even lower. Now, if we break that, there's like an air gap, big gapping space where price rallied up very strongly, and we could we're forming the symmetry, price symmetry, where you can go right in the middle, it's like a paper heart that you cut when you were like a little kid, and you unfold it. But you got the paper heart symmetry on one side. What's happening on one side is happening on the other, and so we can get down to, there's a lot of heavy support down to the 108.06 area, right? And that would be about, measure that out, that's like 400 pips away, So and again, we would look at the U.S. dollar to give us a clue on the euro. Okay, so some of the news that we're looking at, that is, we have PMIs coming out of Germany. If they are lower than expected, we could probably see that news be a catalyst or a trigger to bring the euro lower. Let's take a look at the British pound. British pound, similar. I mean, just lower swing highs, lower swing lows. We had a nice uptrend. And no, seasonally, the British pound usually around this time usually goes up, right? But with inflation in the U.S. and the possible rate hike and money seeking higher yields, we're seeing money flowing out of the British pound and moving into the U.S. dollar. And we can see lower swing highs and lower swing lows. We have a make my man line, got my green line, and then we have our downward sloping. We have our bearish, a bearish channel actually, if we can clone that, right? So like it's basically a bear flag, but every time we've hit come close to getting to upper resistance, we see price coming down towards support. Okay, so we can see that we have a price rallied up to the one spot 3509 or one spot 3517, and you have like an evening star 3-candle pattern here that is very bearish. Right there is our 3-candle pattern. We can also put a Fibonacci from the top to this low, and we can see that price rallied to the 23% retracement. So it didn't even get to the 38% retracement. That the buyers, even who were maybe sellers taking profit, I mean, they just got right back in this thing short to maybe take this down to the support line. Comes in around about the 1 spot 3252 area. Okay, so we can see price continuing to move down. So bull versus bear on the pound versus U.S. dollar. I definitely would regard this as for a bear. Okay, so we can see this coming into play. And let's go ahead and keep going. So, and the story will be same. It should be the same. Maybe New Zealand dollar. And I don't even have to do that anymore. Yeah, I got this nice setup here, right? Big bearish move here. A bearish engulfing. Move all drawings here. And this is huge. Big candle here on the daily chart. This is bullish. I mean, we had a 3-candle bullish morning star pattern right here, where price was trying to get some footing and say, hey, maybe we can do this, and then bam, just like a truck coming out of nowhere, right? Did it come out of nowhere, or if we go to a higher time frame, we could probably see even more, right? We can see on the New Zealand dollar weekly that this weekly was already cranking to the south side 2 weeks earlier, right? And also in a downtrend as well. So the weekly is showing us some extreme bearishness, right? It's trying to work its way into a flag where we could find a bottom and turn, but with in candlestick formation, this is what we call 3 black crows. And this is a 3 black crows pattern. A weekly is pretty, pretty bearish. Their support comes in at 68.57. So even if the news, let's say the news comes up and we get, we might get a fluctuation where price may just go up initially on the news. Then I would look at something to fade this, a way to fade this, to be able to take this down lower on any type of a bounce, because the downtrend is so incredibly strong. Now, doesn't mean that we don't get some type of bullish engulfing there as well, but this looks the trend looks sideways to down And it's really been ranging from, you know, it's been a very difficult market because once you've got this uptrend and the trend line break, we just kind of moved sideways to down since April. Australian dollar, even more. There's your three candle patterns, your three black crows, right? And price continues to move downward, so we're in another downtrend. You know, starting to become repetitive, right? So any bounce you'd see, you want to sell it, right? So let's say this is some type of this is a weekly chart, but you want to drop on down to your 4 hour, your 1 hour, and you might get a rebound like this, right? But it's a downtrend. So what you want to do is you want to short any type of rally. Shorting here might not be such a good idea. You want to, in a downtrend, you want to short strength. This is a pro tip that I'm sharing with you that, I teach my Elite Trader University students, where, because if you shorted here, even though it's a downtrend, you would have lost a lot of money, right? So just because it's down doesn't mean you short it, and just because it's going up doesn't mean you buy it, because it only went up for a little bit of time and then started dropping again, right? So it's kind of like one of those reverse psychology things, right? When you think it's going down, you really wait for it to go up, and when it gets up to a certain level, right? Like alley-oop, like spike it down or something like that. You want to use your fibs on the swing and look for a rally to the 38% or 50% retracement. And when price starts to turn at one of these Fibonacci levels, then you want to get your shorts on, right? Again, it's not a trade recommendation, or this is for educational purposes only, okay? But that this is the process that you do. You want to sell high and buy low, okay? A lot of times people they sell low, but sometimes it keeps going, but sometimes they sell low and it goes against them. Or when it starts going up, they buy and then it drops, and then you wonder why, what happened, right? So it's very important to look at your time frames. Okay, so that's the Aussie dollar. If you want to trade in a lot of times people have trouble selling because they go, how can I make money by selling, right? But so maybe buying might be interesting, where we have something like the dollar Swiss, where we're bouncing off of key level of support. Let me move this. Okay. So we took a fib, we bounced to the 23% retracement, and we're bouncing up. So we could actually see 93.30 was the old high. That could be our target for dollar Swiss, right? And we broke a sloping trend line, so we have a new trend line that's rallying up to the upside. Okay, so we can actually see price probably rally north as well. Okay, so I would look for, a continuation. If this trend line does not break, I would like to see a continuation toward this old high and even beyond, right? So that is what I would be looking at. Bulls versus bears. I'm bullish dollar Swiss. Okay, and let's see. And so we are looking at, this is the dollar Swiss. Let's take a look at dollar yen. Very, very interesting. Another interesting kind of guy there. Wall drawings, and then let me start from scratch. So here is we got to high 115, and we did break a trend line. We broke an upward rising trend line. Dollar yen can be kind of messy, right? And we're on the other side of the trend line, right? And so we could continue to see a move downward on dollar yen. And for the reasons being that we've got a lot of Japanese stimulus coming in, and the other the yen, they've had a tremendous amount of stimulus and some good Japanese data coming out too. And I usually don't pay attention to Japanese data um, because of usually seasonally the yen is usually weak, and this season it's a little different, a little funky. Um, let's take a look at the dragon, the pound yen. And you can see that we've been, this been falling like a rock, right? On the, yeah. So we just, big, strong candles to the downside, and we may see some more downside action. We have support at 52.32. We're currently at 53.19. We break that, though, we have quite a ways to go. We can get down into this. This area was tested multiple times over the past year. 49.24. If we break that, now the possibility too exists that we could break to the upside. And if we got a high, broke 54.70, then we could probably see a retest of the old high. But it seems like Japan is really getting their act together economically. And so the yen is actually going to be benefiting from its own economic strength, just like the U.S. dollar is benefiting from its own strength. It used to be just the opposite. You could have a good Japanese economy but a weak yen, and you could have a good U.S. economy and a weak dollar. Now these things are kind of turned upside down, like everything else right now during the COVID crisis, right? So that's what we're looking at. So let me look at my notes. I believe that we covered the euro and the pound and the New Zealand dollar are going to be in play. Australian dollar is going to be in play as well. And so we want to pay attention to those key data points that are coming out. We also, again, the most recent one that's going to be coming up is the People's Bank of China. And so we want to pay attention to the Australian dollar, New Zealand dollar, just to see how they actually shake out during this time. You can see that we are in a triangle, and when you see a triangle, think of indecision. Think of where bulls and bears are equally matched, and so someone's got to give, right? And usually there's some type of a catalyst, right? So we need to break this line to the downside, or you could rebound momentarily, but the trend is down. So again, like anything else, you want to watch the news. Also, look at the key levels of support and resistance using simple fibs, which we teach and use. But there's other things that I don't have time. This video's already gone really long. And I want to thank you guys for watching, and look forward to servicing you in the coming year. Wish you a happy Thanksgiving. And remember, you can, my market heat map is available. You can use that coupon code to save big on our lifetime subscription. We will be removing the lifetime subscription as of next year, so make sure you rush to get your access, your lifetime access now, right? But I want to invite you to come over to Elite Traders University. If you are struggling, if you're trading and looking for guidance and mentorship, come over to Elite Traders University. Come over to our website. We have a couple of things. We have a couple of free gifts there. We have our Income Boost Blueprint. That's our ebook, which gives you valuable insights on the Forex market. If you're new or relatively experienced, you can get your copy. Also, if you would like to learn more about the Elite Traders University and our method of trading, you can also sign up to our free masterclass, 4 Pillars to 6 Figures, and you can go ahead and come over here to that. That's also on our website. And if you are ready to get started and want to enroll in Elite Traders University. We are taking students for a certain amount of time. In fact, you can actually sign up for a breakthrough strategy call with me. I will be taking calls. You can get to my calendar here, and you can book a call with me and see if we're a good fit for you to help you reach your trading goals. So you can lead the elite life as an elite trader. And so I look forward to talking to you or seeing you. Please also visit the Forex Cash Machine. One of if you are not watching this, if you are watching it from the Forex Cash Machine group, you're already there. But if you're looking for a group, you're looking for a home that doesn't have a lot of spam, doesn't have any spam in it, that gives you good content and a vibrant community that's constantly growing. And we have all kinds of insights, videos, inspiration, and trading tips. Then you come on over to the Forex Cash Machine. You can come there. You can go to, let's see, you can probably go to the join link. Okay. You can look up the number 4X Cash Machine, or you can actually go to theforexcashmachine.com to sign up and join. Okay, so that's it for me. I wish you all the best. Happy Thanksgiving and peace and pips. Love you all. Cheers. Bye. God bless.